It was announced with great fanfare.
The biggest step that we are taking today on that path towards a sustainable, low-carbon economy is an investment of $100 million of new capital into a green investment fund.
Financially, it was a relatively small step considering the size of the problem.
It does feel like, in terms of climate, we are rapidly hurtling towards a cliff.
Now it has a new CEO with billion-dollar ambitions.
We've got a bunch of stuff that we're looking at that we're excited about.
But with big private players in the market and a new government, what is the future of taxpayer-funded climate finance? Welcome to the NBR Podcast. I'm your host, Simon Shepherd. We're all familiar with the goal.
Our world is warming. And so therefore the question for all of us is, what side of history will we choose to sit on?
We are deeply supportive of being net carbon zero by 2050.
So this episode, we talk accelerating decarbonisation. New Zealand Green Investment Finance was set up to do just that, starting with $100 million and topped up by subsequent Labour-led governments to $700 million. Its mission is to help finance green projects that may not have been viable for a private lender. And now it has a new CEO. You were in banking for years,
Yes.
and then at the NZX. So what attracted you to working in government-backed green investment finance? Sarah Minhinnick has been in the job 3 months.
Yeah, I think that the problem that nzgift is trying to solve is the challenge of our generation. It does feel like, in terms of climate, we are rapidly hurtling towards a cliff, and that we need to work on the problem right now. And as you said, I do have an extensive background in banking. So I've worked in structured finance across all parts of the capital stack for years. I was involved in the green bond market when it was in its infancy in New Zealand. So it felt like a really cool opportunity to be able to contribute using my skill set.
Do you have a sense of urgency about this?
Yeah, I do. I think no matter who you talk to, the size of the problem is really, really large. So it depends on the estimates that you look at, but everyone's saying that between 35 and 60 billion is needed to achieve the transition to net zero by 2050. So we do need a lot of people working on this, and there is a sense of urgency.
So the transition in New Zealand is going to cost how much again?
35 to 60 billion.
35 to 60 billion.
On whose estimates you use.
Yeah. All right. So that's where nzgift, New Zealand Green Investment Finance, fits in. But when it started out, it had really smaller investments, and I would say not a huge impact. Would that be accurate?
Yeah, I think that's a fair comment. So the nzgift, New Zealand Green Investment Finance, was established by the government in 2019, and it was seeded with an initial pool of $100 million.
Yeah.
In 2021, the government contributed a further 300, and then again in 2023, another 300. So the total pool of investable capital that we have right now is 700 million.
Yes, okay. And when you started out, or when it started out, you weren't there, but it was smaller projects. But is the only way to get real impact is to get larger scale projects underway, or larger scale investments in projects underway. Is that why you were there?
We're ambitious. So what attracted me, one of the things that attracted me is that there is a big opportunity to do deals that can scale and bring in large amounts of offshore capital. So one of our recent deals, the Solid Zero deal, is a good example of that. That's one where we put in 145 million and also had 220 million of offshore capital come in from really good partners. First Sentier, SocGen, Natixis, they all contributed to that syndicate.
So this is the idea of crowding in, isn't it? So you make the investment and you bring in private partners.
Yes.
Would they have made those investments if you hadn't gone out and done that investment?
Well, that's part of the model. So one of our overarching objectives is to accelerate investment into things that decarbonise the economy. So we are looking for things where we can bring in other capital partners, because back to that number, it's a really, really big number, and we're going to need a huge amount of private capital coming in and supporting the transition.
Yeah, so That's the mission, right, of nzgift, is to help or accelerate decarbonisation. But how do you know whether you're being successful with this taxpayer money that you are accelerating decarbonisation?
Yeah, we have a number of metrics. So on the decarbonisation point, we have a team of specialists that we work with to evaluate that. And so in terms of like the lifetime impact so far, we've invested in things that have contributed to the removal of up to 1.6 million tonnes of carbon so far. So just to put that in layman's terms, that's the equivalent of taking almost 500,000 cars off the road.
Right.
So the impact is large, and that will grow as we continue to evolve and we continue to make bigger and bigger deals happen. And then we have other commercial metrics as well. So we do invest on a commercial basis.
Yeah.
We have a return on equity target that's set by the government. We have portfolio benchmark returns, and we've been making those and exceeding those.
Right. Well, let's talk about that. Because this is the balance. Mm-hmm. The balance is you have to operate commercially and yet at the same time decarbonise and prove the success of both.
Yes.
So what is the acceptable rate of return for public money from the government's point of view for this?
Sure. So we have a portfolio benchmark return, which is the 5-year government bond cost that's that moves around as interest rate cycles move around, plus 2%, so 200 basis points. So we have to achieve that. It goes up and down as markets move.
But you have to be 2% above that.
Correct. Yeah.
As your return.
Yeah,
okay.
That's right. And we have been achieving that. So the current portfolio returns are 8.09%.
Right, 8.09%. I guess what I'm trying to understand, so it's successful in terms of beating the benchmarks that you have to do, but are you profitable?
Yes, we are profitable. So for the year through to the end of June 2023, we've reported a profit of 4.9 million. And when the organisation was set up, there were targets on achieving profitability because it was from a standing start, and the company met that a year earlier than it was asked to be profitable. So that's really good. We do forecast profitability for future years as well, obviously with the caveat that there are shocks and there are unforeseen circumstances.
Well, can you outline to me what those high level targets are in, say, 1 or 2 or 5 years?
Oh, we're about to put out our annual report, so I would just encourage people to look at the forecasting and that.
Right. So when is that
when
out?
It pops out. That's out in a couple of weeks.
In a couple of weeks, okay. Yeah. So you can't talk about what's in that. Are you happy?
I am happy. I think that the group, and look, I'm new to the group, so I've only been there 3 months, but I think that the group has done an amazing job from a standing start to get to a point where they've committed, 561 million of capital over the lifetime of the organisation, made over 30 investments, and had an impact in decarbonising, like we just talked about.
It's devastating. Some of us got out, some of us didn't.
Cyclone Gabrielle is the most significant weather event New Zealand has seen this century.
New Zealand needs to mitigate, adapt and build for climate change. But you have to fund that. nzgift, New Zealand Green Investment Finance, was set up in 2019 to address what was described as market failure in the climate finance sector. Since then, the government has started issuing green bonds to fund infrastructure.
BlackRock, one of the world's largest investment companies, has committed $2 billion to help us, New Zealand, become one of the first countries in the world with 100% renewable electricity.
And now one of the world's biggest asset managers has also come here to be involved in climate finance. So the reason for nzgift being established in the first place seemed to be that there was market failure in the climate finance sector. That may have been the case then, but is that really the case now? Does the reason for you to exist, is it still valid?
It is still valid, and there is still market failure in the climate finance sector. What we aim to do as nzgift is to fill gaps and unlock capital structures and bring innovative deal structures that will make these deals work and make them possible. So I think a good example of that is the Eastland geothermal
right, tell me about that.
deal. So that's geothermal generation assets. There were some major bank partners that were able to fund the generation part of the deal. Where they needed nzgift was to fund the connection to the grid for those assets.
Yep.
And so that's sort of a good example of where we can bring things that we can do that maybe others can't, whether it's because of their credit model or underlying requirements. We can come in and unlock a whole deal and make things happen.
So explain to me then, I mean, if you've got a commercial operator, i.e. a bank, that's willing to fund on part of it,
Yes.
and yet you operate on commercial terms, how is it possible that your commercial terms are different from the bank? I mean, surely if you're just operating on the same sort of commercial returns, you wouldn't be doing that because the bank didn't do it.
I think it's a little bit more nuanced than that. Oftentimes we're funding in a part of the capital stack that a major bank might not be able to fund for any reason. So we might take a mezzanine or subordinated debt position that they might not be able to take at the time. There's also elements where we might fund where the company needs very long tenor debt, for example, to match their asset structure. And then we can come in and fund longer than what a major bank would do.
So you can have a very long-term horizon on your deals?
Yeah, we can. And also sometimes, when companies are getting going, but the decarbonisation impact of those companies might be quite large, we can potentially take early stage risk where others may not be able to.
Okay. Is that reason, I mean, you say that reason for nzgift to exist is still here, but, from standing back and looking from the outside as a layperson, you see funds like BlackRock being wooed here by the previous Labor government and wanting to set up a $2 billion fund. So is that complementary to what you do, or is that competition to what you do, or are they just doing what you do from a private market sense?
It's complementary to what we do. So, back to that discussion that we had earlier about it's a very large number, and this space more really is more. We just need a lot of capital flowing into this area. And even if you put everything that we're doing with everything that BlackRock is doing, we would still need, 10 times that amount. I think it's great that BlackRock and other funds are looking at setting up here. We'd really welcome the opportunity to work with them when that makes sense on a commercial basis in the future. And from what I understand, they're looking at playing in slightly different areas, so we'll see. $700 million to invest. You've invested more than $400 million, so there's still just under $300 million left in the kitty. Is that correct? Yeah, I mean, the numbers move around because we're continually exiting investments, and we've recycled roughly 24% of the capital, $116 million over that 5 years, which is a really good recycling cadence. So there'll always be churn. Yeah. We're really excited about the pipeline of things that we see coming up, and also, as I mentioned, we're interested to put together really big deals and really impactful deals. So you can see, perhaps that's not a lot of headroom when you start to put together some of these things.
So you're saying that what's left is not actually a lot of money in the context of what's needed.
In the context of the size of the problem.
Do you want more? Are you going to go to the government and say, we need more?
I think there's a range of ways that you could do this. I mean, we certainly have aspiration to put together really good groups and to drive offshore capital into this. I think it's always good to have a lot of capital invested in these things, but I also think that you need to be realistic about the size of the population and the size of the balance sheet. When you compare to something like a CEFC in Australia, they're much, much bigger.
Explain the terminology there, the CEFC?
So the Clean Energy Finance Corporation.
Right, okay.
So that was
Is that the Australian equivalent?
It is, with a slightly different mandate in that they focus pretty much solely on energy. And I think that's inspiring for us, and it's kind of like showing us the way of what we could do and what we could be in the future. They were set up in 2012 and they've invested tens of billions into projects.
Right. Okay, but that's purely down to either the size of the economy there as well?
It's. I think it's appropriate sizing, you know, us versus Australia. If you look across the capital markets, typically various elements of the New Zealand capital markets are about 1/10 the size of Australia. And so that's where we have the aspiration to be as well in several years, is to be several billion in terms of what we've invested in and also brought in.
I hate to ask this question, but are we late to the party then? As a country, are we late to the party in doing this kind of green investment finance?
I think New Zealand is in a really good space when you look at how much of our electricity is generated by renewables. So I think that there's a lot to be optimistic about because we're, you know, quite far down that track in terms of, you know, perhaps compared to other countries. I think it's great that this was established and that we're continuing to put together these bigger deals. Could everyone have moved earlier? Perhaps, but the important thing is that we're doing it now.
You reference bigger deals. Do you have bigger deals in the pipeline?
We've got a bunch of stuff that we're looking at that we're excited about.
Are they bigger than the Solar Zero deal?
Yeah, they absolutely could
Are they
be.
bigger than the 78 million that you're lending to Far North Solar Farm?
I think these deals are good because they demonstrate that it's possible to scale these things. And so now our aspiration is moving up a notch, putting together big things.
You mentioned before that we have to be realistic about the size of our economy and there's the amount of funds that we have to deploy for something like this, no matter if the problem is so massive. You're profitable now, and the Climate Change Minister Simon Watt sent nzgift a letter of expectation saying the government expects distributions to the Crown. Have you made any?
We have not made any yet. So we're still in the first 5 years in terms of deployment. I think that is a conversation to have in the future. We haven't had the discussion yet.
You haven't had that discussion with the government yet, but you are expecting that may be on the horizon?
If we do our job, yeah.
Okay. You also say, or the nzgift was established to be work, as we say, on a commercial basis. And this current government has scrapped things like the Giddy Fund and the subsidisation of EVs. But you don't see that kind of subsidisation or discounting of, say, commercial lending rates as your model. You're not going to step into that void?
It's not our model. We invest on a commercial basis. We've got a very commercial structure. We're an independent company, so we're what's called a Schedule 4A company. Yeah. So we have an independent board, an independent investment committee, and we run it through those processes. So, could you have someone else that's, giving grants on a concessionary basis? Yes, but that's not our model.
That's not your job. Okay. I see that nzgift is expecting a review of its investment mandate in the coming financial year. That's correct?
Yeah, that's right.
What does that mean?
Oh, I think it's natural with a new incoming government that they would look to make sure that every entity is aligned with their priorities. So, it's just part of that natural
And have you
transition.
been given an indication of a changing of priorities from this government?
No, not yet.
No.
I think it's possible, but we haven't yet.
Right, it's possible. I mean, have you considered what that might look like?
I mean, from what I've heard when I've been in conversation with the ministers, their articulated priorities centre around renewables, electrification, agriculture. I think a lot of the deals that we do fit very nicely into those pillars. So I would expect perhaps a continuation of that,
right.
but we'll see.
So there's no implication. And I'm just giving this the political lens at the moment, because given the current government's sort of attitude to corporate welfare, disestablishing subsidisations like the Giddy Fund and electric car subsidies, does it imply to you anything about the longevity of the New Zealand Green Investment Fund?
No, it doesn't. We're profitable. We achieve profitability ahead of target. We're investing on a commercial return. We're beating the portfolio benchmark returns and the return on equity targets. So I think that's a good outcome.
So you're meeting the requirements that are set out for you at the moment?
Oh, yes,
or
and beating them.
And beating them.
And beating them.
Okay. This is all great, and it's all deals and investment and things like that. But for the layperson, for the New Zealand taxpayer, I just want to finish on this. How can I, as a taxpayer, see what you are doing is making any difference? What visually or concrete example can you give me that you're making a difference?
Sure. I mean, I think you'll be able to see more solar panels on homes.
Yeah.
You know, we're investing in companies that do provide that function to end consumers. I think when you're driving around the countryside, you'll start to see more solar farms being built. I think hopefully in time you'll see some really good concrete coming out.
Concrete, literal concrete.
Yes,
yep.
we've invested in a company called Neocrete that's working on tech to essentially make concrete that's much lower emissions.
Yep.
Concrete is quite
Yep.
high in emissions globally. And
Yeah.
so, you know, you might not necessarily be walking around town thinking, oh, that looks like low emissions concrete, but we're hoping to see that in the future. And then, you know, I think electrification of transport too, you know,
Right.
over time.
So you've already done buses, haven't you?
We have, yeah. We've done, we did a deal that had a tranche of electric buses for New Zealand. So if you take kinetic buses,
Yep.
those are buses that we've helped fund.
Do you remain optimistic that this massive amount of money that's needed just for New Zealand's transition to clean, renewable energy is possible?
I do. I mean, I'm an optimist by nature. And I also think that there are efficiencies that are developing in the market. Like you can see nzgift investing on a commercial basis and generating a return. I think over time, people will be investing in these technologies because it's the financially efficient, rational thing to do. So yes, I'm very optimistic, and I think that the solutions that are coming out are really amazing.
Some climate optimism to end this episode of the NBR Podcast. Links to audio clips used can be found in the description, and thanks to content producer Jake Latham and creative director Michael Hickmott. Next up, dynamic pricing, subscription traps and pressure purchasing. The Aussie government says it's cracking down on these unfair trading practices. So, should we? I'm Simon Shepherd. We'll catch you then.